Welcome to this latest edition of Share Views, brought to you by London South East. That's lse.co.uk. Joining me today is Alessio Rostani, CEO and founder at leadingtrader.com. Welcome, Alessio.
Thanks for having me, I appreciate it.
Rather than me explain what a whiz you are at technical analysis, why don't you actually explain yourself?
Actually, I wouldn't agree with that. I don't think I'm a whiz at technical analysis. I wish I was. I certainly hope that I can certainly, one of the things that I found is the markets are probably the best teacher. I would say I'm a student of the markets, and we're always learning. And it is often a danger to think of oneself as being overly smart and being an expert in, say, technical analysis or in any subject, purely because what often that does, it stops you from learning. And I found that markets are constantly evolving. Markets are constantly changing. New patterns develop, and some of the old patterns that used to work when you're trying to analyze the markets don't work anymore. So you have to be able to adapt, and you got to learn. Certainly, I think I've learned a lot from the markets. Markets been my best teacher, and I hope to improve going forward.
And what are you seeing? What stands out in the markets for you currently?
It's interesting. Basically, one of the patterns that I follow is I look for. I think the thing that I find the most rewarding is looking for turning points. I'm not a counter trend sort of investor or trader, but I do like to find opportunity. The markets become so beaten down. For example, when a market or an asset class like gold, oil, whatever kind of stocks you're looking at, when they become so extremely hated that everybody starts avoiding them, that's when I become interested. I guess you could call that a contrarian. Famous trader, his name is Paul Tudor Jones. He once said that to be a good trader, to some extent, you have to be a contrarian. And that often means that you have to do the opposite of what everybody else is doing. I mean, Warren Buffett's been saying that for a long time, be afraid or be fearful when others are greedy and be greedy when others are fearful. So what I look for are usually markets, trades where everyone is avoiding them, people are afraid, but that doesn't mean just go and buy them. No, what you do then is you look for signals, patterns. You look at the charts, for example, where you might be able to find a good buying opportunity at a very good discount. So that's one of the things that I look for, and I think I consider that to be one of my strengths.
Donald Trump was driving the markets yesterday with his fire and fury directed at North Korea.
Right.
How are markets reacting to today's news of a potential 4 missiles being sent into the sea next to Guam, which of course is a US territory and therefore significant to the US?
Well, 2 markets that I keep an eye on, S&P 500, the main stock market index in the US. I do look at the FTSE 100 too, but S&P is very important. And also the volatility index, the VIX. Now, we have not seen that much of a negative reaction to this news about North Korea. I mean, sure, the S&P fell by a few. I mean, it fell down yesterday, I think it was, but it managed to recover. That's the thing, it managed to recover by the end of the closing day. Volatility index, the VIX, again, we have not seen a major fluctuation to the upside yet. However, having said that, Jeffrey Gundlach, I think his name is, and he's called the bond king, the new bond king. He recently said that he's going very aggressively long. He's buying the volatility ETF, he's buying short-term volatility, if I'm not mistaken, ETFs or something like that. So essentially he's betting on volatility. He's betting on volatility increasing. Now, whether he's going to be right or not, I don't know. But
what do you feel about that?
Here's what I know from history or statistics. Markets usually drop significantly, mostly on economic bad news, not on political bad news. Because sure, you can have some political event like North Korea or Iran, something to do with nuclear weapons, and that. Sure, that could cause a little bit of uncertainty and panic. But if, at the end of the day, what investors and what Wall Street, what they really care about is the key numbers, the economic numbers, job growth, central banks, their announcements. That's what they really care about.
Capital economics. We're talking about the economic bad news of a peninsula war, which basically, if you understand that South Korea is the fourth largest electronics good producer in the world, well, if you imagine the supply chains are going to get disrupted, people aren't going to be able to buy their smartphones and so on. South Korea provides all sorts of back-end electronic bits and pieces. So there will be an economic impact. But hey, it's a big if, isn't it? Because there is no war there at the moment.
Yeah. If, let's say the worst case scenario came about, and let's say North Korea, Kim Jong-un, decided to respond quite aggressively to Donald Trump's strong words a couple of days ago. But having said that, I think that would not be in their interest. North Korea knows, their regime knows, that if they do the worst thing possible, they will be destroyed. I mean, within a few days, America will respond. So that will cause a destruction. But I did actually hear a report that the first thing that North Korea would do, if they decided to act and retaliate, would be to launch an attack on Seoul, on the capital of South Korea. So
it's within artillery range.
Yeah, I mean,
they could fancy.
I think the report said they could level out the capital of South Korea very quickly. Will they do that? No, because if they do, that will definitely seal their fate very fast. I would say though, I think so here's one thing I just want to add to that. The area which people should focus on in terms of economy is China. China credit growth has bubbled, actually gone into a bubble territory. So that would be the first area of concern. If the Chinese economy started collapsing, that could have a major impact on other areas of the economy. And secondly, as I mentioned before, while a North Korean dispute or any kind of aggression could cause the stock market to drop because of the uncertainty, that drop would be a buying opportunity, not something to be afraid of. So if you see news about North Korea coming out and you see the stock market's dropping, wait for a buying opportunity around that, because the markets will quickly bounce back up. In fact, history has shown it to be correct. The only time when markets don't kind of bounce back up quickly is the economic news. Again, just to show you, if you look back at the Donald Trump's election, the night when he got elected, when Trump became president, markets tanked. I mean, they fell down by a couple of hundred points, but then they quickly recovered by the next day. Because at the end of the day, what investors, Wall Street really cares about is the economy, the numbers, the job growth, the central banks, not so much North Korea and all that kind of stuff.
Gold has been seen as a safe haven at the moment. We're at a 2-month high.
Yes.
What's your point of view on gold?
Yeah, gold, actually, I always like to have some investments in gold. I do already have. And it's a good idea. Now, traditionally, it's been said that gold has been referred to as chaos insurance. So as an insurance policy, if chaos ensued in the world. In the past, that has turned out to be a mixed response. Sometimes gold does go up when there's been a lot of uncertainty. There was actually, just before Brexit and just before Donald Trump became president, you see a steady rise in the gold prices. And I think that could happen again. If we see more...
We missed our buying opportunity.
No, you haven't.
It's a 2-month high?
No,
or do you expect it to go a little bit further?
I certainly told our members on Leading Trader to get into silver. Actually, silver was my trade of the month last month. We got into silver, and also gold I mentioned as well.
How do you trade silver? Do you actually buy the physical companies which mine the product? Or do you actually go futures?
You could buy futures. Very risky to buy the futures, though. I wouldn't recommend that to beginners or folks who have not traded futures.
What's the safe way?
ETFs. So you can buy ETFs like SLV, which gives you exposure to silver bullion, or GLD, the ETF for gold. Or you could go buy... I remember a good friend of mine who works in Morgan Stanley. He said to me that he does not have any investments in gold bullion or silver bullion. He buys the gold stocks. So gold stock ETFs, in other words, index funds that track gold stocks, gold miners. So look at GDX.
Sort of a proxy for...
Yes, exactly. So you could buy, in other words, an index fund that gives you exposure to gold miners, gold mining stocks. And those actually are far more safer than owning individual gold stocks.
A number of different companies have released results this morning, including the estate agent Savills, the upmarket estate agent Savills. What do you read into Savills' results?
I can't say I'm an expert on Savills, but having said that, I do track their price Because one thing that your viewers may be interested is that if you want to know the state of the housing market in the UK, it's always a good idea to keep an eye on Savills, because they predict the price of Savills was a good indicator, leading indicator of how the housing market's doing and how it did back in 2007. So keep an eye on it, because in 2007, right before the housing crash, you could see Savills share prices were falling, but also they were a good indication of when to buy as well. So right now, I don't see any warning signs on the housing market. I do agree with Jim Rogers, who said that the housing market in the UK has become a bit of a bubble. I think nobody would disagree with that. It has been a bubble. Certainly London, I would say, has turned into a bubble. They have come down slightly. I mean, the recent house prices should have fallen down. But here's the thing. I'm not the kind of person who goes against the trend. So the trend is still up. And so keep an eye on the FTSE one. Here's one thing. Here's what I want to finish with this. One of the most ignored stocks in the world are European stocks. UK stocks and European stocks are ignored by Americans wrongly. And that's a good thing if you're a contrarian. So if you want to be looking at an area of the stock market that's been ignored, undervalued, and could potentially go higher, that's European stocks and UK stocks. So I'm still long on that.
That's it for now. Thanks to Alessio Restani, CEO and founder at leadingtrader.com. Thanks to you for watching. And that's it from this edition of Share Views, brought to you by London Southeast.